Thanks for staying with us on the News at 1. Let's take a look at your market news now. Asian stocks slid, taking their cue from deep losses on Wall Street on Friday. The selling was also fueled by profit-taking after a blistering January that saw several indexes strike record or multi-year highs, while energy firms were hit by a drop in oil prices. Japanese stocks were the most hard hit, with the Nikkei share average declining 2.6%. Hong Kong stock heavyweights Tencent and Sharp declined by almost 2% and 4% respectively. The Hang Seng Index declined by 1.1%. Chinese stocks, though, bucked the trend, with the Shanghai Composite Index closing up 0.7%. Wall Street stocks tumbled on Friday, with the Dow seeing its worst percentage drop since June 2016. The good news that U.S. non-farm payrolls added 200,000 jobs led market participants to fear that interest rate hikes may come quicker than originally anticipated this year. The Dow Jones Industrial Average plunged by 2.54%. The S&P 500 lost 2.13%, and the Nasdaq Composite Index dropped by 1.96%. For more on the markets and some analysis, we cross over to the Johannesburg Stock Exchange. Nompumelelo Siziba is standing by. Good afternoon, Nompumelelo. Over to you.
Thanks very much, Nzinga. Well, the all-share index has also been bludgeoned today. There's blood all over all the sectors, with the all-share index down over 2% at one point. But down by 1,100 points, just to get even a better perspective. I think it's down to around 57,800, somewhere there. And yet we know that not that long ago, the all-share index had hit 62,000. So there's been quite a lot of a drop in recent weeks. And then we see that obviously the reason why markets are generally bleeding is because of what came out of those non-farm payroll numbers, 200,000. It's good news. You know, the US economy is doing well, but if that happens, it's likely that interest rates there are going to move up higher and maybe even faster. Now, that has implications for emerging markets like South Africa. It may force the Reserve Bank to also raise rates, which would be negative for us as we're experiencing low growth currently. So that's the situation there. And the local currency remains fairly stable. It's just above 12 against the US dollar. Let's take a look at the indicators. I'm joined now by Gary Boyson. He's from Rand Swiss. Thanks for joining us, as always, Gary.
Yeah, thanks for having me.
Good stuff. Great numbers out of the United States, 200,000 jobs added, and evidence that wage inflation is rising, which is great. People can go out shopping. But the reason why we're so interested in the United States is because obviously when they cough, we catch a flu. It has an impact on the rest of the world. So why are we seeing markets declining all of a sudden?
Well, certainly, I think it's, as you said, it's that wage price inflation that was really the key number in the non-farm payrolls on Friday, and that sort of cost push kind of inflation is going to feed into the system and potentially mean more rate hikes for the US and at a faster pace. So the kind of third rate hike this year was very marginal. It was very kind of 50-50, but now I think the market kind of expecting that to come through, and in an environment of slightly less loose monetary policy and slightly less liquidity in markets, you're certainly seeing that the equity markets are being punished. And again, it comes kind of to that risk-off, risk-on trade, and really you're seeing money flowing out of the emerging markets into the developed markets as it kind of hunts for yield as well. So obviously with the expectation of rising interest rates in the US, that becomes a place that you can park your cash, and you don't need the relatively high yields found in emerging markets.
South Africa offers a yield of what, 8.5%? The US currently 2.8%. There's still a massive differential.
Yeah, but the differential, remember, the differential in the yield is always, also because of the size of the risk involved in the investment as well. So obviously South Africa and emerging markets, developing economies, while they do have higher growth rates, also have higher risks associated with investing with them, which investors therefore require a higher return on capital. So certainly, but it's just the relative change that we're seeing at the moment. And that's certainly not to say that just because interest rates are going to be higher in the US, we're not going to see money coming back to the emerging markets. I think if you look at the emerging market story, it's still there. We've got the demographic dividend that will come through, and we've also got obviously the possible technological and productivity improvements that can come through as well. So I think emerging markets still a place that you're going to see real economic growth coming through, but just in the short term. I mean, this is kind of what market participants look at as they try and price assets correctly.
Okay, and then speculation around Mr. Zuma's future that continues, but to what extent do you think this is having any impact on the rand, or is it just really a dollar story?
Again, it's so difficult to try and, untangle what is a local story and what is an offshore story when you're looking at a currency like the rand, especially because the rand is such a liquid emerging market currency that it often forms a proxy for this, risk on, risk off trade. It's a very easy way for foreign participants to speculate on the direction of, fiscal policy in the US, for example. So a lot of I think the currency movement in South Africa actually has nothing to do with what's going on locally. I mean, certainly we've seen, the shock kind of political announcements affect the currency, but what we've seen now with the strength of the rand, absolutely a portion of that was the renewed optimism we have around leadership, but a portion is certainly because the dollar has been significantly weaker against all of the major currency pairs.
And then we see that some European investors representing Steinhoff shareholders have now decided to serve the company with a writ of summons. They're taking a class action to recoup their monies. How successful will they be, given the fact that really it's the lenders of money who come first in the queue?
Yeah, so it's a very good question. So traditionally, I mean, if you look at the risk, as you say, the lenders will get paid first, then kind of the hybrid instruments, and the ordinary shareholder really sits at the bottom of the pile, and they get paid out, after everyone else has had their bite. But again, you kind of look at it whenever you invest in an ordinary share, you're taking on the risk of a company, and you kind of expect that business can go bad, and profits cannot be as good as perhaps you expected, and you might not get dividends. But when there's an instance like this, where there's actual fraud, where there's accounting irregularities, where there's been deliberate manipulation of the numbers so that you as an investor made a decision on incorrect information. I mean, absolutely, people must be held to account there. I mean, I think the issue is going to be, as you say, there's a lot of aggrieved parties here, and unfortunately, ordinary shareholders come at the bottom. But I think certainly there's a case. But I think also investors have to remember, especially Steinhoff ordinary shareholders, before they kind of get their hopes up that there might be some sort of payout coming. That there's a lot of aggrieved parties, and there's also very little information on the accounting irregularities. We haven't seen clarity on what the issues are, and until we get the restated financials, which have been delayed again, we kind of don't know what the value that is left in Steinhoff. So to make a prediction is very, very difficult.
And despite the fact that they've delayed those results again, they still keep on experiencing some appreciation in the share price, because some people were talking a few weeks ago about the price going to zero. They're very lucky, aren't they?
Yeah, so again, you kind of look at it, and this is, for us, the movement in the Steinhoff share price is just absolute speculation. And generally, when you see a lot of volatility in a financial instrument, it's because of the uncertainty around it. So, in a very certain, payoff profile, you have very little fluctuation in the ruling price. When there's a huge amount of uncertainty, you get large fluctuations, which is exactly what we're seeing on Steinhoff. We're seeing, big recoveries as speculators move in, and then profit taking and big sell-offs. And the market, you can see, doesn't know where to price Steinhoff at the moment, because there's no information to try and make decisions on.
Indeed. Well, thank you very much for your time and your insights as always, Gary. That was Gary Boyson. He's from Rand Swiss. After a short break, Nzinga has more business news for you.